Dylan, it's good to have you. So no recession for salty snacks, no recession for cheese balls, huh?
No, it's been a fantastic category. It typically grows about 3 to 4% a year. This year, the category itself in the last 13 weeks grew about 15%. Our overall portfolio grew about 16%. Our power brands grew about 17%. So we're really seeing a very strong consumer. Snacking traditionally has just been a fantastic category. I've been here for 25 years at Utz, and it's grown almost every year that I've been involved in the category itself.
What about, you clearly have pricing power. What are you doing with that? You've raised prices. Is more coming?
Well, we did. We raised prices. If you go back in time a little bit in 2020, when demand just sort of surged at the beginning of kind of the COVID lockdowns, the supply chain was really great. Things were working out very well. As we morphed into 2021, the supply chain got a little tighter. People problems, labor problems, supply problems. That sort of brought on some cost of goods inflation. We were a little bit slow last year in 2021 with raising prices. We had some technology that we implemented. We had some people and talent that we implemented. And really this year we were able to increase pricing to offset inflation, ideally at the end of the day to beat inflation, but also to allow us to reinvest ultimately in our business.
Right, but I'm just wondering if you're planning more, because we've heard that message from a lot of the food companies, and that's why, for those that were following some of these packaged food companies, not so surprising to see the cost of food at home actually rise in July. But I do wonder if that's peaked out as well, or if you think that'll continue to rise.
Yeah, we had two series of increases in 2022. We started in February with some. We quickly came behind in May as we saw more inflation. What we basically organized around for the second half of 2022 is to really do selective and strategic pricing, not a large wave of pricing across our entire portfolio. We think we've got the changes in place today that, as they sort of make their way into the marketplace, will not need for us to do another large scale increase, in the second half of 2022. And, we're going to work really hard on the productivity aspects of our business that can, save some money as well, which we can reinvest.
Well, that's good news for shoppers, at least. So Dylan, what changes have you seen, if any, from the consumer? Because we got some warnings ahead of Walmart's quarter and Target's quarter this week that consumers are shifting their priority. They're having to spend more on groceries and less on discretionary. What have you seen within your power brands over the course of the last few months and coming months?
What we've seen is across the club channel, mass channel, food channel, convenience, every one of these channels for us, for the category and for us, has been double-digit strong. So, I think if the consumer is making a choice as to where they're spending their money, I think you heard and you referred to Target and Walmart and general merchandise issues. And I know that they'll be reporting this week, and we'll find out a little bit more about where they are. But ultimately, at the end of the day, a lot of that consumer buying power has moved into the staples, food, beverage, and we're really seeing a continued spike in our sales and demand as well for it in both dollars, but also in strong units and volumes.